Well, tax season is upon us, and we get the question a lot this time of year: can mortgage interest be tax deductible? So I'm going to dive into that today in today's tip of the week and answer that question if it's on your mind. My name is RJ Baxter with Fairway Independent Mortgage. So let's get into it. So I've got my notes here because I don't want to miss any of the points on this. I want to say before I get into this that I am not a CPA or tax professional, so be sure to consult with your tax professional on this to verify all this information. So this is to the best of my knowledge, but there's been a lot of tax code changes over the past couple of years, so it's important to keep these things in mind as you're considering the tax deductibility of mortgage interest. So the first major change that I wanted to mention is that for homes purchased after December 15th, 2017, the deduction in total combined qualified mortgages was reduced to $750,000 from $1 million before that. That means that up to $750,000 in cumulative mortgage debt, you can deduct the interest on that portion of your mortgage debt. So in other words, I'm going to get into this in a little bit, but you can deduct interest still on a second home also and a primary residence. So if you have a mortgage on each property, it's important to remember that the $750,000 is the combined amount of those loans. So let's talk about second homes. So you can deduct the interest on a second home just like you used to be able to. The thing with it is that I wanted to mention is you don't have to prove that you use the property as a second home. But if you rent the property out at all, let's say you VRBO it some days throughout the year, you have to show that you personally use the property for your personal use the larger of 14 days in the year or 10% of the total number of days that the property is rented out during that tax year. So you have to be able to do that in order to claim that mortgage interest deduction as a second home. The next thing I want to talk about is home equity loans. There's a lot of confusion as to whether you can deduct the interest on home equity loans. And the short answer is yes. However, the home equity loan has to have been obtained to either buy or build your home or obtained to improve your home for home improvements. If you took out the home equity loan to do something else like pay off other debt, pay off an auto loan, pay off credit cards, or whatever other reason, you cannot deduct the interest. The final and maybe the most important point that I wanted to make is that the standard deduction increased a couple years ago as well, meaning that if you don't have more itemization than what the standard deduction is, then you can't claim the mortgage interest deduction, or it wouldn't make sense to claim the mortgage interest deduction. You have to itemize your deductions on your taxes in order to take advantage of the mortgage interest deduction. If your mortgage interest is less than the standard deduction, which I believe, well, I'm not even going to say it because I don't know what standard deduction is this year, but if the mortgage interest doesn't exceed the standard deduction, it makes more sense to just take the standard deduction because it'd be more of a deduction than the mortgage interest would be. So hopefully that makes sense. But definitely something to keep in mind as you're looking at as to whether it makes sense to claim that. So once again, consult with your tax professional or CPA on this to see how these rules apply to you. But that's my interpretation of some of the tax guidelines and how it applies to the question of can mortgage interest be tax deductible. So once again, my name is RJ Baxter. Give me a call if you have any questions on that or anything other mortgage related. That's why I'm here. And you guys have a great rest of your day. Thanks for watching.